What's going on? So today I'm going to be going over order blocks and imbalances. This is going to be part 2.0, because the previous video I did on order blocks and imbalances did pretty good, and it seemed that you guys got help real well from it. So I'm going to be trying to go a little bit more in depth on this concept of order blocks and imbalances. I'm going to explain them to the best ability that I can personally. These concepts were made by ICT Inner Circle Trader. If you want to go to the direct source and learn them, this is not my concept. These are his concepts that I use, but I'm going to show you guys how I use them and the ways that I use them, and I try to simplify it as best as possible. So let's get right into it. So I'm going to explain to you guys from beginning to end, just in case some of you haven't seen my previous video on order blocks. So let's just start off by saying this. Have you guys seen this move before? Chances are you guys have, because this is something that happens very often, and this is the simplest to explain is when price is in a trend and it has a retracement and it has that continuation of the trend. These are the primary moves that I like to catch. Why? Because they usually have the most confirmations for price, and they also tend to be areas that price is more than likely to retrace to before going another direction. And being able to catch these moves uses the concepts of order blocks, imbalances, and using the fib. But I'm not going to be talking about the fib in this video. You guys more than likely know how to use the fib at this point, but we're just going to go over these order blocks. So firstly, an order block is basically an engulfing candle. You've seen an engulfing candle before, candles that are like this. One candle goes down, the other candle engulfs it. Usually this is where these order blocks lie. So I'm going to show you a few examples of these, such as right here. This candle right here, the last up candle before this down move that then took these lows out, this would be classified as a 4-hour, since we're on the 4-hour time frame, bearish engulfing. And what the main points that you want to look at on this candle are the open and the close, not the wicks. You're looking at the body. So this is where you could put a box around it like this, something like that, but I myself like to use the regular lines. So now you can see what did price do. Price had this drop, but then eventually came back to this area, and as you can see, it came back to it 2 different times. One right here, and then the other one right here. That's 2 different times price came to that area. And then as you can see, the move that happened from that area pushed all the way down, taking out all these lows. This was a major move that anybody would have liked to capitalize on, but how would you have known price was going to come into this area? Because for one, this is an order block. Why? Because this is the last up candle before this down move. But if you also look, the next concept of imbalances is also right here. So look at these 3 candles. I want you to look at this candle right here, this down candle right here, and then this last candle right here. These 3 candles, what you want to look at are the wicks. So I'm going to zoom in closer for you guys to see. You want to look at the wicks, and what do you see? There is a gap in between the low of this first wick and the third wick. There is a gap in between. And why is this gap important? Because this leaves an imbalance in the market, and an imbalance is when there is not equal opportunity for both buyers and sellers. Why? Because the sellers, it was way more volume, so it has to give equal opportunity. So eventually price is more than likely to come into this area to fill it in before going the other direction. And this doesn't mean it's always going to come to this area and fill it in right now, because it could be any time. It could be weeks from now, it could be days, but eventually these prices will eventually try to get filled in. And as you can see, this area was an area you would most likely be targeting from down here. Even though price didn't come and fill it in here, it eventually did. If you look all the way to the left, but we're not gonna worry about where it filled in or not, because we're just looking at this example over there. But as you can see, it was filled in. But as you can see, price came to it and used it as basically a resistance. And what also did it do? It was rejecting this 4-hour order block. So that's one little example of both of them being used together. I'm going to show you guys more examples of order blocks right now. Let's just go to a random point and look at some examples of order blocks being respected. So what do we know about order blocks? Order blocks are the last up or down candle before a major move. So this would be one right here, this last up candle before this down move that then took out these lows down here and also took out these lows down here. So this would be an example of a 4-hour bearish order block also. So what would you do? You would pull over a line so you know the open and the close of this order block. And what happened? Price had a high it had made, came down, made the low, and then from here price retraced to this order block area. And also if you pull the fib, which is another confirmation I use, just like this, it's also in confluence with this fib area. So there's a lot of confluence in this area for price to keep going. So if you keep in mind the trend of the market, which was in downtrend, why? Because it was making higher highs and higher lows, which is bearish market structure. So we have all those. It's rejecting this 4-hour order block, rejected the fib, and then what happened from here? Price targeted the liquidity below these lows, and then took price all the way down. And as you can see, these are areas that, like I said, that tend to be the moves, just like this. This is the main moves that I like to catch. Basically a push, a retracement, and then getting in the basically at the top. I don't want to say we catch reversals, but we kind of do, to be honest with you. Because look where you would have gotten all the way up here for all this move. You see the risk to reward? That's why I love using these concepts, because it gives you the best risk to reward, so you're not risking a lot for a potential major move. Look at this, 1 to 12, and this on a 4-hour time frame. And since the markets are fractal, this happens on every single time frame, not just one. It happens on multiple. So now let's move on to showing you guys another example of this being used. So let's just go back in time to right here. Am I not logged in? I don't know, maybe I'm not logged in. I might have to upgrade. But look, let's just look at it like this. What do we see right here? We see that the market is making higher highs, higher lows, so we're in a bullish market. Let's look at what price is doing right over here before this major move up. Why did price stop in this area and then start to push? If you know the concepts of that I'm showing you guys, you would look over and you would be like, oh, look at this last down candle before this up move that took out these highs all the way up here. So you would classify this as what? Bullish 4-hour order block, just like this. Let's get this damn trend line out of here. You would classify this as a 4-hour bullish order block. And you can see how well this guy respected. It came to it and never closed below this. Stayed above the whole time. And if you also look, this might be a fib level. It doesn't always. But as you can see, where did it close? It closed above these fib levels. It did break through it, but these were just lower candles, more than likely just getting the liquidity before getting that full push up. So you can see there's a lot of confluence in this area. And this is just using the concepts of 4-hour order blocks. But if you guys want to get even more in depth and more refined for these order blocks, the one thing I do is I like to put 50%. So by doing that, you just get the Fibonacci and you just put the 0.5 and you just get the 50%. So if you pull it from, I'm going to show you guys an example of the square. You get your fib, you pull it from the high to the low, and it'll show you where the half point is. And I like to do that with my order blocks because it gives you a more refined area, especially on bigger order blocks. such as the one to the left right here. Yes, even though this is a major candle, this will still be classified as a order block, a 4-hour bullish order block. And if you pull the 50% of that, where does it go? Right here, right in the middle of, right in the close of this 4-hour order block. And where is the 50% of this one? Right here in this 4-hour order block. You just see all the confirmations and confluence. And then look, let's take it even a step further. Now let's get our fib with our normal settings, pull from this low to this high up here. What happened? It rejected the 62% and came to the pip of our OTE 70.50% level. Do you see this? To the pip, it did this. It doesn't do that. It's not random. It just doesn't get that specific and random at the same time. It's just not going to happen. And you could say these are just cherry picked examples, but at the end of the day, just try them out. Trust me. And I'm going to show you guys more examples because it's everywhere. Right here. You can, once you practice these examples, you can see them everywhere. You never unsee them. Right here, another example of a 4-hour bullish order block that we have a retracement. Let's pull our fib from here to here. Yep. Marks up with this. 2 confluences already. Let's put the 50% of the 4-hour order block to refine it. Let's see if price even got even lower. Got even lower to the pip, just like this. Respected all of them, started closing above all. And then what could we have done? Let's say all the way down here is when we were getting into the trade. So let's not even keep any of this in mind. I'm just going to block this off. I'm going to do this. Like this. Say it was just like this. What are we going to target when we're getting into the trade at these levels? Because even though we know we're going to get into the trade at these levels, where are we going to target? Right there, if you look above, right here, what do you see? An imbalance. So this would have been an area that you would have been targeting off rip. And this could have been your 1-to-1. This is where you could have got out safe. And then what do? Pull out your fib again. What was it respecting right here at this imbalance? The 38.20% continuation level. So from here, we were able to calculate multiple moves that we could have caught, all from using the simple concepts of order blocks and targeting imbalances. You can also use imbalances as support resistance, but I've learned just from my experience, maybe it's just US 30, but I doubt it. This algorithm all moves the same. But imbalances for your value gaps or inefficiencies, whatever you want to call them, they tend to, I use them as targets because they tend to go to that area, and when they're in those areas of imbalance, there tends to not be a lot of confirmations to take trades. So even though you know where the imbalance is and they tend to be filled, I wouldn't necessarily use them as confirmations to get into a trade. I would use them as areas that you would target. So I'm going to show you another example of why I would use them as areas to target. Wow, I don't know why this is all like this. What the hell? Let's go right here. Let's just go right here. So what do we see? If you look to the left, off rip, the last down candle before this up move that took these highs out and is in the range, what would this be? You guys already know, 4-hour order block. And we're going to do what we always do. Major candle is bigger, so we're going to pull to 50%. What do we see? Comes right to the middle of it. At this point, you guys can see there's multiple examples of it working exactly how I'm selling you guys. And yeah, it's not always going to happen, but it happens very often. You only need 1 to 2 trades a week to be successful. So let's say you were getting into a trade over here, something. Let's pull the fib. Let's see if it matches up with these levels also. As you can see, it kind of does. This had a down candle, which is kind of a gap. This looks like this was right when the week opened. But as you can see, it was respecting 79%. And from here, if you were looking to get into trades, what are areas you were going to look to target? For one, what do you see right here? From this candle to this candle, we had another gap. So this would have been an area that did get filled. And what did it do? It created liquidity by making a double top right here. Created a double top with these highs and these highs right here. What happened? I guarantee you that if you pull your fib from this low, let's just do this low to this high and put the continuation level, that is where it went. But okay, so right there it doesn't, but you can see how close it did. It got to this continuation level of this fib. So price had that push, retraced. If you pull this over right here, you can see how close this down candle got to this area before pushing up to go higher to see higher prices. And then where else could you have targeted after these equal highs? What do you see again? From this candle to this candle, we have another gap, which is an imbalance or inefficiency that then went and got filled. Do you see this? I'm showing you multiple examples. And yes, you can see that it did have a retracement here, but it wasn't a long-term retracement. If you pull your fib from this low to this high, you can see that this was just a continuation of this overall move that we were looking at. Came down, came up, retraced to go a little bit higher, retraced more before having that full push. But you can see all these things are in confluence with each other. You can use these imbalances as targets. And if you look even higher up here, you can see how well they get respected before. They just get pushed through to either get filled and have a reversal, or they're used as targets. They get filled and they just keep getting pushed through to go to even higher ones, because you know even then there's liquidity above all these highs. Also there's also buy side liquidity. And then what happened? Eventually price came to get it all before having a push down to go higher. Like I'm telling you, these moves, this is the main move you guys want to look for. This is the simplest move. You can get a lot of confirmations to take this trade if it's in the right direction, an overall trend, and it also gives you guys a good risk to reward, and it happens very often and on every single time frame. I'm telling you guys, using imbalances with the Fibonacci and targeting imbalances in the market is a great strategy. Simple, just straight to the point. You have your confirmations you look for, and just like that. And then if you want to even get better risk to reward, you could use the 50% of these overall imbalances, not imbalances, these overall order blocks to get even better entries. Because look, if you would have been looking to get into the trade around up here at the top of this order block, to have a safe enough trade, you would have at least had to have minimum of 400 pip stop, and this on the 4-hour time frame. So if you're on, say, hour or 30 minutes, say a 40 pip stop for a potential 1-to-1 right up here, taking these highs to maybe a 1-to-2 all the way up here. But say if you would have waited to get into the 50% and waited, had that same stop loss, that 1-to-1 and 1-to-2 quickly turns to at least a 1-to-3. So you see what I mean? It just gives you a better overall stop loss, and it keeps you from getting in unnecessary trades. So if you're not necessarily sure the price will reject here, just wait. That's all you have to do, is just have more patience. But this is just another 2.0. I'm gonna make another video on order blocks and imbalances, because I'm constantly changing the way I think, changing the way I use them, and I'm always improving. So I'll make sure I show you guys anything that I do change. But just watch my other video, watch this video. I try to make it as simple as possible for you guys to understand it, because I know these concepts seem complicated at first, but they're really not. Just think of the concept of bullish engulfings and bearish engulfings. Majority of the time, that's where these areas are, and these are key areas that you like to watch for in the market. Trust me, start back testing and looking at order blocks and just marking them up and looking at how price respects these areas, and then you'll see how they work for yourself. So that's really it. Hopefully you guys found this video helpful, and I'll see you guys in the next one. Before the video ends, I just want to let you guys know that I run a free Telegram chat that I am actively in every single morning, talking about what I expect to happen in US 30, giving you guys entry signals for when I take trades, and I do this every single day. Not every day I catch trades, but that's to be expected. But majority of the time I'm going to have 3 to 5 trades a week, and I do this all for free. I help people. I'm actively growing this Telegram chat, and I do it all for free. So if you want to better your trading and want to learn a strategy for free and just want to have a community of like-minded traders, the link is in the description to my free Telegram chat, and I'll see you guys there. Also, make sure to like on this video, comment on this video, and also make sure you look at all my other videos and concepts that I discuss on trading and how to better yourself as an individual overall. Make sure you subscribe to this channel to be actively notified when I post more videos. I post every single week, multiple times, 2 to 3 times at minimal. Also follow me on Twitter and follow me on Instagram. These are the 2 apps that I'm the most consistent on. I post my daily life. I also post trading related concepts, fitness, health, motivation, all of the above. And that's really it. So like, comment, subscribe, and I'll see you guys in the next video.